Good afternoon and welcome to the next session on NWR's Vantage Point Conference. Up next we have the Managing Director and CEO of Veris, Michael Shirley. Before I hand it over to Michael, just a reminder we're doing basically sort of elevator pitches in terms of efficient use of time and then getting to a more extensive and interactive Q&A. So if you did have any questions, submit them through the panel down the bottom, the Q&A button. And we'll get to those post the end of the presentation. But Michael, I'll hand it over to you to get started. Thanks very much.
Great. Thanks, Simon, and I appreciate everyone's interest in Veris and where we're going. Yep. For those who aren't aware of the history and context behind Veris, we're a business that came from a series of acquisitions that started back in 2014. And by 2019, there've been over 10 acquisitions done, but the business was really starting to struggle with poor performance and significant debts at that point. I started late in 2019 and we commenced a process to start rebuilding the business and realising the underlying potential. Since that period has started, we've reduced the costs, restructured and simplified the business, and really focused and pivoted the strategy to go forward. We now operate across 4 key service lines, so engineering survey, property survey, our planning and urban design business, and our digital and spatial business. And we're a national business across all of the main centres in Australia, working across a whole range of large and strong industries with a really good forward potential workload. One of the points of note I'd like to make is our 49% acquisition of the Indigenous-owned business Woomera Group a number of years ago. This has been a key strategic decision by us to invest in Indigenous participation in a meaningful way in our industry. And it's been really pleasing to note how the Veris Woomera partnership has really sustained through that period, and we've been able to see Woomera grow through that period, both in terms of revenue and profitability. One of the most important elements of our strategic refresh was our focus to get to a more professional services approach. Rather than fighting with the small surveying businesses out there on small local projects, we really chose to focus on a smaller group of larger blue chip clients where we can add value and build long-term relationships and make a more sustainable growth. We've grown our revenue for those 14 key clients we hold from down in the low 20% up to 45% of our revenue this year, which has been a really big growth and helps us in terms of the core of the business. In big clients such as defence are an important ongoing part of our future. A couple of years ago, they were a zero client for us, and now they're a large and sustainable client with a long-term pipeline. And early in our transition, we understood that a pathway to profitability was essential to rebuild trust in the market. The focus on our strong clients and a professional services approach has been a critical part of building sustainable profits from our base business. I think it's important to understand the concept of our strategy and where it differentiates Veris. We don't intend to be just a surveying business, but we are a business that uses our surveying core to leverage to other value. Surveying gives us skills, it gives us capability and market knowledge that we can really leverage into our wider strategy. We've invested in new technology and approaches to make more of our data and provide value in that data to our clients. This includes data analysis, AI, machine learning, and advanced analytics. One of the recent developments have been our platforms, which allow us to present and visualize the data and analytics for our clients. And I'll give you some examples of that a bit later on. It puts us in a unique position to sell value to our clients with data solutions rather than just giving them the data or a hard copy plan. We don't intend to be a low margin, high volume subscription business. We're transitioning to being a higher value, higher margin business with high value solutions based on our analytics and our platforms. And our transition and growth in this digital strategy has been measured investment as we have focused on the core business and building towards profit in parallel. We work to have close relationships with our clients and focus on their assets and how we can add value to the management of those assets. As a distinction for us, we get paid to collect the data. We get paid now to hold the data. We've got our own platform that holds 3D data and provides visualization capabilities. And our analytics then allow us to add value to that data and provide solutions for our clients, and then repeat that as we go around the cycle. It's a relationship of value rather than being a transaction with many clients that others pursue. The money for us isn't in so much in the subscription fees, although we do charge that and get revenue from them, but rather in the margin we charge on the value. It's a far more sustainable and profitable model for us going forward. We spent the first few years of our time with the business in stabilising and restructuring the core surveying business. We don't want to talk about what we might be able to do in the future with our digital technology. We want to be able to talk about what we were doing and how we're working. We're now at a point where we can talk about the technologies we have, the projects we're delivering, how we're making things work, and how that's delivering revenue and margin for the business now. The focus for us to accelerate that pivot and to move to a greater proportion of our digital business, and hence the increased margin that will flow from that. And we're in a unique position with our deep technical skills, our national position, and now the cloud-based analytics and visualization to really get value from this model. We're able to apply our technology approaches to a wide range of assets, from the natural cliff face you see here, where we built monitoring, modelled the cliff, allowed to pay remote monitoring and a visualisation capability for our clients, through to more traditional assets such as buildings, roads, tunnels and more. And this focus at the asset level digital twin is a bit of a unique offering for us. As I said earlier, I wanted to give you a bit of an example just quickly on how our digital strategy is working in an applied way with our clients. And I'll talk about Roadside, which is our unique road maintenance monitoring platform. Road asset maintenance is a large but inherently conservative market. It's the type of market that's ripe for digital disruption. Our application involves collecting highly accurate three-dimensional mobile laser scanning data, plus using high precision photogrammetry at the same time. Then able to map road defects to a high level of accuracy and precision using AI and machine learning, and then put this solution into a platform that provides our data and insights in a web-based cloud platform with that allows our clients to operate in multiple locations and dive into that data and understand the analytics, and then plan out their maintenance or repair work or whatever it is going forward. Products such as Roadside are highly valuable because they optimise the approach to road maintenance. It's a multi-billion-dollar capital works program, and the more efficiency that can be built into that is a high-value product, both for government and private industry clients. We're currently working with a number of our government and private industry clients, applying and trialling this in different applications, and we see that this is a huge opportunity going forward as we take this platform out. I appreciate your interest today, and we see huge opportunities as Veris is able to accelerate our digital transition in concert with our strong surveying and spatial core. So thanks very much, Simon. I'll stop there.
Perfect. Thanks, Michael. I'll just need to stop your share screen as well. And while you're doing that, I'll just remind investors on the line, if you did want to ask a question, Q&A panel at the bottom of the screen. But first up, given the significant cash position, how do you plan to deploy this capital?
Yeah, look, Simon, it's worth going back to say that when I stepped in and the new leadership team joined in, we had a share price below 2 cents and we had real debt of over $18 million. So rebuilding that balance sheet was a strategic priority for us as a business. We felt it was really important to underpin the strength of the business. The sale of Acura to Telstra was an important step in doing that, and it really stabilised our business and gave Acura a future with Telstra. We've been able to look at that cash in a couple of different ways. In the short term, it's been really important for us to leverage that into operational savings in terms of how we work through our financing requirements, how we build in our new equipment, how we've been able to deal with suppliers and providers, and taking us from a position of really being struggling in those negotiations to a position of strength. And we've been able to turn that into P&L benefits going forward in the short term. In the medium and the longer term, it's built us into the active position in the M&A market. It's allowing us to use the M&A market to accelerate the execution of our strategy. And we're actively using that to get into discussions around acquisitions, around technologies and positions that help us with our digital strategy, geographic gaps to fill, and looking actively at mergers where we can bring businesses together and get core skills and capability. So we see it as being a real asset going forward, and we think we've been able to sweat that cash pretty well, and also used it selectively in our share buyback to underpin, where there's cheap stock out on the market and look after shareholder interests.
Perfect. Thanks, Michael. What differentiates Veris from other competitors in the 3D/spatial data sector?
Look, lots of people would say that they have a unique position, but I think we really do. So we've got that core strength of technical skills in our surveying business that we can then apply into our digital business. And it gives us a unique market position. It gives us a skill base. And then we're able to hold our own analytics, our own platforms in-house, and we're not dependent on others. That means that we're able to really pivot to where the money is with that group of clients, and we're not trying to smear it out and get low margin spread out over thousands of clients. We're trying to work and solve problems with our clients. So I think that understanding the core capability and how we've been able to pitch that into a digital environment has been really unique. And the second thing is, there's not many people around in our market that have got the scale and the presence that we've got around the ANZ market. And that gives us our ability to get into new technologies, invest, move people and equipment around the business.
Perfect, thanks. Is there still significant pressure on labour markets within the industry from a hiring or wages point of view, or has this abated somewhat?
Look, it'll be interesting to see how the rest of the year progresses. Certainly through last year, there was significant pressure on labour markets. And I think one of the things we've been able to do is use that as a lever to push choice within our business. We've invested heavily in our people, and we want to retain the really good quality people in our business, but we don't need to chase revenue, and we can't find enough people to do the work that might be in front of us. So we're really using that to accelerate that pivot into the higher margin, more digitally orientated parts of our market. If we have a choice between where we need to operate and we've only got one person to do it, we know where we can accelerate that and get a better return on that. So that way we can pay for those labour costs and get a higher margin back that flows through for shareholders.
That makes sense. How has the decline in construction volumes affected the company's operations, and what strategies or adjustments has the company implemented to mitigate that impact?
I'll start with the last part of that question. Part of our overall strategy over the last 3 years has been to take ourselves out of that small and low margin segment in the market. It's a highly dispersed industry. There's a lot of very small surveyors out there. They're better placed to do the smaller jobs. We don't need to do those. So part of our strategy has been to get out of that mire at the bottom and get ourselves up into the bigger projects. So that's been a core element of protecting ourselves from the ups and downs in the more transactional end of the market. The other thing we're finding is, because we're working across a number of core sectors from defence and government and resources, energy, into buildings and other areas, we were able to ride the ups and downs of those markets. So at the moment, the defence market remains incredibly strong. Resources and energy, renewables are all really strong. We see that there's some weakening in some parts of the property market, so the built environment, so the CBD towers, but we can move those skills into greenfields or the other projects. So we see that by retaining choice and chasing margin, not revenue, we're able to focus into the markets that are strong and chase the money, so to speak. So we're not seeing a drop-off in the bulk of our markets, and the area which is sort of CBD property, we're able to take those skills and apply them elsewhere. So it's been a key part of where we're trying to be.
Perfect. Can you provide any performance updates since the last quarter? Do you remain on track to return to profit for FY23?
We've been really consistent all the way through the last few years that our first steps were to return the business to profit, and also be able to provide sustainable long-term dividends, for shareholders, and start at a base and not be able to and not step back. The business has never done those things in the past. So last year was the first time the underlying Veris business delivered a profit, which was the first step in that path. We see that at the half we demonstrated the progress, and we see that continuing into the second half. And despite some of the broader economic challenges, we see that we're continuing on that path. We also see, though, that we are building and investing for the medium and the long term here. So we continue to invest in the pivot, and we see that if we don't do that, we'll end up going backwards very quickly. So we continue to be consistent in that message.
Perfect. And what would you say the main barrier to revenue growth continuing on its recent trajectory is?
Look, two answers to that. The firstly is we're not chasing revenue growth per se. 3 years ago we were sort of in the 70s. We'll do over 100 this year in terms of revenue, and we could continue that revenue growth pretty strongly over the next few years. What we really want to focus in the coming 12 and 18 months is margin growth, and to do that we'll trade away some revenue to stay into the areas that give us more sustained and larger margins, and that'll be better both internally for the staff but externally for shareholders. So our focus will be using the resources we've got, chasing higher margin and not trying to chase revenue growth. We want to have an underlying base, organically growing, profitable business that through the M&A strategy we can add to and be accretive rather than just trying to grow for growth's sake.
Yeah, no, that makes sense. And in terms of technological advancements and industry trends, how do you stay in front of those, and what's the sort of R&D outlook and whatnot in terms of new products and offerings?
Yeah, so we deploy a couple of elements of our strategy here. Firstly, is investing in our core capability in-house. So, we have our in-house analytics, AI teams, platform development, all of those things that we do ourselves. We then externally have partners that we work with. We don't want to be writing software. We want to work with others who have those softwares and build them in and use them and be able to configure them to operate with our environment. So we have a number of external partners locally and globally that we work with in that space. And then in terms of our investment in technology that underpins that data collection piece, we've stayed right at the front end of that. So all of the work we've put in the last few years in bringing in new laser scanning, new hydrographic, new drones, all of that has been about staying at the front end of that technology piece. And part of underpinning the balance sheet was to allow us to do that from a position of strength. So we continue to bring in new technologies. And as the largest provider in Australia, we've got those providers coming to us and saying, look, we've got something new, can you trial this, do we work it out? So I think those three elements of our strategy let us stay right at that edge and try new things.
Perfect. And what has been the biggest driver of growth for new defence work? Is it targeting a particular capability or is it something else?
Look, I think for defence, there's a couple of interesting elements to that. There's work we do direct to defence, which is more technology area and some of the material areas. So that's high precision work. And then there's all of the biggest, most stable market is all of the underlying base infrastructure. So every time there's a new investment in a piece of kit, an aeroplane, a submarine, a ship, they have to reconfigure the bases or the facilities behind that. So working in those areas and helping that asset management piece and the asset development piece is a core skill for us. And we've been able to do that around the country now with a number of key partners. And the good thing about the defence industry is it's very much relationship and performance based. So, when you're doing a good job, you get drawn into the next one. So we've been able to show that in a number of projects where we did the first thing and then we get drawn in by all partners into the next job based on performance. So we see that underlying investment will continue to be strong and it's a growth industry around the country.
Perfect. That concludes the Q&A segment. Michael, the company's hosting a tech demo day, I believe on the June 20th in Melbourne.
Yep.
What will that feature? Just out of interest.
So we'll have some more in-depth description of some of the things I've touched on today, show some of the technology, but more importantly, show how that technology comes together into some of these value-adding solutions and platforms that we've started talking about today. Simon.
Perfect. Thanks, Michael. If you did have any interest in attending that, as I said, it's in Melbourne only. You can shoot me an email, simon@nwrcommunications.com.au, or reach out to the company direct. Michael, thanks very much for the presentation. If anyone had any further questions or follow-up for one-on-one, Michael's very passionate about the business and keen to chat. So thanks very much, Michael, and thanks all for attending.
Appreciate everyone's interest. Thanks, Simon.
Cheers. Thanks, Michael.